In this episode, I'm going to talk about an area in Victoria, namely Ballarat, and why I personally would not invest there. Let's jump straight into it. Ballarat is a couple of hours drive west of Melbourne, and it's got a population of around 120,000 people. These are the cheapest houses in Ballarat, and most of them are around 5% rental yields. You can see $300,000 for a typical house that might rent for $300 to $350 per week. So let me show you why I think Ballarat is a terrible area to invest right now. From an investor's point of view, you're only a couple of hours outside of Melbourne, you got really high rental yields, and it's really affordable. So you can buy multiple properties in here if you're an investor, and they're probably gonna pay for all their own expenses, maybe even be cash flow positive. But here's what you're missing. Typical buy price is around $500,000, and you can see the price graph over the last couple of years. The prices have been trending downwards, and they've probably still got a little bit longer to go. A typical boom bust cycle normally lasts for 2 to 3 years as a boom cycle, and for the bust cycle anywhere from generally 2 to 5 years. So in this case, we've just lapsed over that 2-year bust cycle, which means that we can potentially have another few years of bust. Let me show you some of the other key stats and why I think this market is not good buying at the moment. However, there's going to be a turning point in the future very soon. Let's have a look at the supply and demand. On the supply side, the stock on market is pretty low, 0.42%, and this is overall in Ballarat. There's very low inventory, so only 1.5 months of stock left to sell. There's fairly low building approvals, although there are some for this area. The hold period, so how often people sell their properties, is almost 10 years, which isn't bad. You want to see, I generally look for beyond 9 or 10 years is good. And then on the demand side, it's not looking that great. So we don't have a lot of supply on the left-hand side, but on the demand, you can see days on market are at 52. That's pretty tight for a regional market. However, if you have a look at the graph below, these days on market figures have been trending upwards for the last couple of years. So as they've been trending up, the market has been declining, and it's probably seen its biggest declines over the last couple of years, but it's still likely, in my view, got a bit longer left to go. The vacancy rate is starting to get a bit higher. 2% in a regional market is starting to get a little bit higher. Compare that with other tightly held markets like Brisbane, like Perth. They're around low 1% overall, so that's a very tight market. So once it starts to get beyond that 2%, then it's going to get into oversupply from a rental perspective. We don't even bother having a look at the clearance rates because there aren't a huge amount of auctions out this way. But the supply and demand, they look not too bad on the surface. If you have a look at the price graph even closer, the biggest declines has been in the last couple of years. So we're likely not going to experience the same amount of decline in terms of pricing. And it has plateaued a little bit. That is some relief if you already own property here, but it is likely that overall this market will continue to decline a bit further. And if you have a look closer in at like the Melbourne market and those pricing declines, they haven't started to come up. So they haven't started to boom yet, most of those Melbourne suburbs. So although Ballarat is a different area, it's regional, you've also got to look at Melbourne as a whole and what Melbourne's market's doing. And I think Melbourne has a bit more pain to go, and I think Ballarat will definitely follow suit, especially after looking at the supply and demand curves and equations. When I compare Ballarat pricing with relatively inner city properties in Melbourne, Melbourne looks so much better value than investing a couple of hours outside of a major capital city. So personally, I see capital cities, and I've seen capital cities perform really well compared to regional markets. And I'm just talking generally here. I'm not going to pinpoint individual regional markets that have outperformed capital cities. But if you were a betting man and you had a look at traditional capital city investment properties, especially houses with land component, they generally have grown in a much better or much faster way than regional areas. And Ballarat is likely, in my view, to probably have another 1 year of negative growth. And then as Melbourne starts to come out, which I think is probably going to be into 2026, as Melbourne starts to come out of the hole that it's in and prices start to move upwards, I think Ballarat will boom off the back of that. However, when you compare Melbourne buying value proposition versus Ballarat, I know that I can buy a property in Melbourne for $500,000-$600,000, only 20Ks to the CBD. I'd rather be putting my money into that versus buying a $300,000 or $400,000 house in Ballarat. And I think that there's much better regional markets to be investing into that are in boom at the moment and that are looking like they're going to continue to boom for at least the next 1 to 2 years. If you don't have the budget for a capital city, I'm going to do some areas that are regional, are more affordable, that I believe are going to grow in value substantially, and so you can avoid the traps of places like Ballarat for the next 1 to 2 years where they're declining, in my view only. But if you do jump into a regional area, just be mindful that regional areas can be oversupplied very quickly with the number of stock, even now, even in this market. And not only that, the demand can also dry up really quickly because a lot of regional markets, although they may have a somewhat diverse economy, there's still only a limited number of people. And if you have one employer lay off 100 people or 200 people, what effect does that have on the greater market? How many families, how many people does that affect? And if those people then leave that area in search of new work, then that's going to leave a hole in the market with that demand. And that hole could mean that there might be another 10, 20 properties become available, which doesn't sound like a lot, but when you're in a regional market, if there's 10 or 20 properties in the one suburb become available, that can add a huge amount of supply to that suburb, and then may mean that values, both for rental values and end sales, can decrease, and they can decrease very quickly. So just be mindful of that, because speaking from experience, I've been stuck in a regional area before. I've ended up making money from selling it, but I've had to wait a long time for that capital growth to come back to the market.